is Wednesday, August 12th, 2020. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was yet another non-virtual get your ass kicked at Jiu-Jitsu Wednesday. Although I did not get my ass kicked at Jiu-Jitsu today. For whatever reason, I wasn't quick pairing off, and the one gentleman that was available was not wanting to roll because he was having some sort of knee issue today. It happens, it's like a perpetual thing. My partner just didn't want to roll. Oh well. You can't feel bad about it because I'm nursing several injuries myself, so it's not as though I'm 100% pristine or that I'm doing a whole lot to initiate the sparring session, because I'm not. But I figure if somebody would like to spar, I'm there to spar, get one round in or whatever. But like I said, it seemed like my partner did not want to today, and there's another day. But yeah, as far as what we were covering today, we did not do any De La Riva stuff. We did not do any reverse De La Riva stuff. We were working from the full guard, and it was a setup for an armbar, and I'm very thankful for it because my partner and I haven't been working a lot of offensive stuff. It's mostly been to some extent, I want to say defensive, but I mean ultimately it was all coming to some sort of lock setup, pardon me, or another. However, today was I don't know why I like the chokes and the arm focused attacks more than leg stuff, and I don't know. I think it's because I started with gi jiu-jitsu, and that's the primary focus of gi jiu-jitsu. It's not playing with people's feet, but it's I'm sure it's something that I will develop. Simply because I'm in the 10th planet system, and motherfuckers are going to go after your knees, going to go after your ankles. So, it's something you got to adopt into your game. But I was watching something really interesting earlier, and it was something of what my partner and I were working today, and it was Ben Eddy. Let me tell you, that dude is flexible, and he's slick as shit. It was basically a video capping the submissions he's done from I think it's not Dead Orchard, it's way the fuck up on I can't remember the name of it. Anyway, it's this really wicked thing from the rubber guard where you're doing like a guillotine from a rubber guard, and I don't know that I'm flexible enough to do that. But we were getting high enough up today on what we were working to actually get to a rubber guard or be in a rubber guard situation. And but it was kind of weird because for the particular thing that we were doing, if all you did after you get your opponent with their shoulders down is to scoot your buttock a little bit away from their body, grab their hip, and then pull them over, and you've got them in an omoplata. And so it's like, I mean, basically, you just like push down on the wrist with your hand, and lean forward, and there's the omoplata. However, this is actually a setup for getting back around to being in full mount, really high mount, and then executing from the high mount a really, really super tight armbar. And I liked this particular one because it was from the S-Guard, and I like S-Guard a lot because I can get really, really tight with it. My thighs are pretty strong, and so, pushing that knee down and really pushing it across my opponent's face when I'm pulling up on their arm That just felt really good today. I got to tell you, I really, really like that armbar, and I hope to be employing it soon. Because that's just tasty. And I don't know. I have a tendency to try and give my teammate or opponent or whatever training partner tips on the particular movement. I mean, because I do have some experience with it, and so I was feeling certain things with it that I thought that if he employed on his, that he would be getting him even tighter than he was. And one of the things is that after you get to the omoplata situation, they roll over. So it's like you lose the omoplata because they manage to roll over their own shoulder and negate that as a possibility, right? Well, in gi jiu-jitsu, the way that I would address that or try and keep my opponent in a position that was negative until I was able to get into like a mount would be to hold the hand under your thigh. Or in between your thighs, basically, but like holding the arm under your thigh. So like they roll over, but you still got the wrist. And so this negates them from just yanking out the arm because you've got it under your thigh, right? But then what you do is you reach over and you grab the outside from the inside, so like over their forearm and around the back of their tricep. And if you just pinch that down, and hold your elbow down with that, they can't roll to the other side. So now you've got both arms trapped, and they have only their thighs or their legs to prevent you from assuming the mount. And if you've got them tight enough with that one side, you can sneak your foot across the other side there and get that in. But one of the reasons I really like to have that opposite arm, the way that I'm talking about, is you collapse it in to where their elbow is like facing in towards their stomach. You collapse it in, and then you use that to pull yourself up onto them. And when you're swinging it over, one thing I was doing is I was hooking my arm or hooking my hand right under the elbow, so that when I'm trying to make my progression to that really high mount, I can get one side by putting the foot over the hip, right? Just transitioning it straight over. I mean, because I've got his head so crowded between having both of his arms like that and maybe even leaning over. And that's another thing, is like if you lean your upper body onto them, you basically have your bicep on their face. And then you can just sneak that knee in and assume a full mount. And when you do that, though, you've already got that elbow and you've already got it collapsed. And so you can get that leg right up in there under that armpit. And so, assuming the real mount that you're trying to get to, I think if I could set it up a little better, one thing I would do is try and collapse back down on that side and just hook the leg behind the head before I've assumed the full mount. So that when I do tip back over, I'm assuming the full mount and capturing the arm. Well, no, because I wouldn't have the arm. That was one flaw. Okay, well, I don't know. I'm gonna have to think about that one. Probably have to get my partner together with me and work on it. Anyway, let's go ahead and throw down with some music. And as far as where we're gonna go, it's gonna be body count. There's no question. But the question remains, what song? And we did play some stuff off Carnivore last time. We haven't played anything off Manslaughter for a while. And I mean, I listen to these guys all the time, so sometimes it's I think I've played something on the show that I haven't, right? So here it is, Body Count, Pop Bubble, First Dance, here on Coin Metal. And that was Clutch. I'd love to tell you what the song name was, but unfortunately, for whatever reason, Winamp doesn't like to to collect the metadata off certain files, and they haven't like cataloged the metadata for music for quite a while. It seems that Winamp used to have a site that it would go to and would yield the metadata for various files that you would have. But they quit keeping track of that, and so you have to enter all that shit in manually now. And I don't understand why, because it seems like it's pretty inconsistent. You know, some bands will actually put their own metadata on there, and so when you're ripping it to your computer, it will have things like the album name and the song name and all that other shit on it. And then again, others don't, and it kind of pisses me off. Anyway, let's go ahead and get into it. And as far as what we are going to get into today, I dug this one out the last time that we were on Monday, and for whatever reason, we just never got around to it. But yeah, let's go ahead and get into this thing first. It's on CoinDesk, and I think this is like an op-ed kind of thing. Bitcoin's Stolen Revolution. And this is on August 9th, 2020 at 11 UTC. And this is authored by Evan Shapiro. So yes, penis. And so, here we go. Who controls Bitcoin? A hint, it's not you. And it's a far cry from the decentralized utopia that many claim it to be. Systems of power are rapidly asserting control over Bitcoin, and their incentives are not your incentives. As an industry, we're at a critical juncture, and we have to choose. We either demand that the properties of user ownership and censorship resistance pioneered by Bitcoin persist, or we accept the facade of false decentralization that has been erected by a centralized regime. Our revolution is being stolen, but it's not too late to take it back. First, let's take a look at who controls the Bitcoin blockchain. 65% of its hash rate is in one country, China. Globally, about 10 different organizations control 90% of the hash power. Big pools are all linked together with decentralized networking connections, or dedicated networking connections. If I describe to you a council of 10 companies dictating the future of a product, and more than half are in China, and beholden to a centralized government, would you call that decentralized? No, but that's the state of Bitcoin today. Maybe you don't care. Maybe you say, quote, even a 51% attack would be just fine by me, because they are still economically aligned in the best interest of the protocol. You'd be very wrong, but you wouldn't be the first person to assume that a centralized power could represent your interests well. There are countless examples in history of misplaced trust in a centralized authority. Some of those authorities were beloved revolutionaries, leaders, countrymen, and members of their community. Everyone thought, quote, they love their country. They won't do anything to cause it harm. Robert Mugabe, the former dictator of Zimbabwe for 30 years, stated his career as a beloved political revolutionary, or started his career as a beloved political revolutionary. He was instrumental in gaining independence from colonial rule. At the time, it would have been hard to think of someone who loved his country more. But that was at the beginning, before he amassed centralized authority. He ended his career causing mass starvation and social upheaval because of brutal, misinformed, and ultimately failed social and monetary policies. The problem is never just a single leader. It's the system in which they are operating. Without checks against centralized power, what remains is to trust it will all be okay. And it never is. So, why would this time be any different? Because Bitcoin is somehow inherently different? Because the person or people who created it had revolutionary ideas? Quote, come on! Crypto was supposed to protect us from this, but instead it's given us new names with these same misaligned incentives. The analog of social and monetary policies for cryptocurrency is the rules of the protocol. When discussion turns to updating or not updating these rules, control suddenly becomes very important. Important decisions such as whether to scale the network as congestion gets increasingly worse, or to update the inflation schedule when block rewards disappear in 2021, we will be left with block rewards don't disappear in 2021. Dude, if the block rewards disappear, so do the miners. When block rewards disappear in 2021, we'll be left to a small council of miners. In turn, they can use those opportunities to make decisions in their favor, to consolidate power, to siphon more value off of the network, to gain favor of local governments, or any other number of things people in positions of power do to maintain their advantage. Perhaps their intentions are good. Perhaps they don't even want to be in that position. We have no way of knowing, and that's the problem. When you're one of 10 players who meets regularly to determine the future of Gold 2.0, and you are de facto controlled by the Chinese government, maybe you won't have the unbiased party you aspire to be. We have no option but to trust that everything will work out okay. So, after over a decade of Herculean efforts, billions of dollars invested, and the hopes of an entire generation of developers and technologists, we're essentially back in the same place we started at before cryptocurrency. The other half of the puzzle is that even outside of centralized consensus, you are rarely, if ever, as sovereign as you think. Institutions oversee every step. When you make a Bitcoin transaction on Coinbase or Binance, you don't make the actual transaction. Coinbase and Binance does. You don't directly use crypto any more than you own your own data on Facebook. You're a customer of a new breed of big tech. This isn't Coinbase, Binance, or any other exchange's fault. They have provided a level of access to millions of users that would have been impossible otherwise. No, that's not true. This is how it has to be right now because crypto is so hard to actually use. Hey, guy is full of shit. Fuck you, lying sack of shit. Connecting to the network is completely inaccessible to anyone without access to server hardware and deep technical bullshit. Access to this revolutionary technology is locked behind some heavy and high gates. Again, complete and total bullshit. Until we can remove these barriers that don't really exist, big tech exchanges are the only option. Again, full of shit. You may not be a customer of Goldman Sachs or Bank of America yet, but you're dealing with the same types of players with a different face. That part is true. Setting the rules to maximize profit from you for their shareholders and collecting every mouse click and transaction. Crypto was supposed to protect this from this, but instead it's given us new names with the same misaligned incentives. Crypto wasn't supposed to be like this. It's still not. We wanted a permissionless system, which it still is, where users set the rules, which they still do. We wanted a revolution. We still have one. We got a new financial toy for a small handful of wealthy companies and individuals. That's a bunch of bullshit too. Some may say that's exciting, but I say crypto can be more. If this is the peak of crypto impact, we're in for a sad reality when we wake up and realized that all we did was transfer financial power from an old guard of centralized institutions to a new guard playing the same game. This revolution isn't over, but we urgently need to steal it back. Okay, let's dissect this bundle of bullshit. For one thing, there is nothing, and I mean fucking absolutely nothing, that commits you to using one currency. It doesn't matter if it's Bitcoin, it doesn't matter if it's Monero or Litecoin or any other cryptocurrency. There is no force on this planet that can stop you from investing or participating in cryptocurrencies, at least not here in the United States. I don't know how it is behind the Green Wall of China, but I would suspect that they are just as capable of acquiring open source software, such as Bitcoin mining software, and utilizing it. You know, this guy puts up this idea that there's some big technical barrier between you and cryptocurrencies, and that's simply not true. Is there a barrier preventing you from earning a significant chunk of the mining rewards in mining? Absolutely, and yes, there are very large entities out there mining. However, their dominance and their control is finite and ephemeral. If at any point their participation were to make your participation less than viable or less than desirable, then you could shift over to another cryptocurrency and they're out whatever fees they're losing from your transactions. This is what makes Bitcoin different. And another thing that makes it different is that it is an ad hoc network. Meaning that if you and, say, 200 or 300 people got together and decided that you really love Bitcoin and you're willing to dedicate a small desktop's worth of computing power to it, you could fire up your own node, at least one node, on that desktop. And when you do, you could be flagging support for BIPs that you like. Now, you know, there's been this general idea that you are committed to utilizing the version of Bitcoin, the implementations that Blockstream and their developers like. And that's incorrect. That is absolutely incorrect. If the day after Bitcoin launched, somebody really liked it and said, you know what, I really like this, but I don't like this 10-minute block time thing. I want to knock it down to 2.5 minutes. And I don't like this schedule for disbursement. And so I want it to last 500 years. And I want 500 trillion coins to be the total number of coins that are mined. And I'm going to span it over 500 years. That's entirely possible. You could fucking do that tomorrow. You could have done it the day after day after Bitcoin launched, and got in on it. It's fucking pre-mining it, or it's asserted that Satoshi quote unquote pre-mined Bitcoin. He did pre-mine a little bit of Bitcoin, but when you look at it in the overall span of things, that pre-mine, it's acted as kind of a buttress against some more radical activities that some people have wanted to do on the Bitcoin network. But yeah, as far as this article goes, you know, I've said a number of times on this show that there's been a concerted effort, and I would say it was probably since about like 2012, 2013, about when Andreas Antonopoulos became kind of popular concerning Bitcoin. There's been this push ever since then to alter the mimetic understanding the public has of Bitcoin. And I would say that this article includes a number of them. You know, the idea that somehow Bitcoin is so technical and so incredibly advanced that the average person isn't going to... Fuck you. Complete bullshit. I mean, when I started with Bitcoin, I had a rudimentary understanding of Linux and enough know-how to be able to read instructions and get it to work on my computer. That's it. I'm not a network administrator. I'm not a coder. I don't code for a living. I'm a fucking fisherman. Everything I do is meant to fund fishing trips and buying fishing gear so I can go on better fishing trips. And that's it. That's my motivation. That's my incentive. You know, so a lot of this stuff doesn't appeal to me because it doesn't facilitate that. But the idea that you're somehow trapped within Bitcoin and that you can't use another cryptocurrency that these entities aren't even involved in is not in this article. But it's a reality. You and your friends could get together and launch your own cryptocurrency. You don't even have to involve anybody else in it. You just get like 20, 30 friends and you say, hey, look, I'm willing to mine this. If you're willing to mine this is the parameters that I'm willing to mine this by. Or if you're willing to agree, go ahead and sign up some desktop or something to this network. Help keep track of the transactions, being processed on the network. Make sure nobody's double spending coins. And, we'll just go between one another. If there's enough incentive to do it, whether it's just in evasion of various onerous taxation points and friction points in our commerce, or that we genuinely like Bitcoin, but don't like all the rules and all the bullshit that's been associated with it. Whatever the reason, it's yours to do. And, like I said, the mindset, I think, behind a lot of these articles is to craft in your mind a reality of something that is simply not true. There is a progression in Bitcoin as far as like the development path that the devs at Blockstream have been pushing towards that creates in Bitcoin the same situation that we have with, say, the Federal Reserve System or the SWIFT system. We don't have any control. We don't have any say. We don't have any participation in these systems, in these networks. We're subject to their rules, and we might as well be slaves according to them. But outside of them, our meanings can be defined much differently. We can be intrinsic aspects of a network, providing crucial services to the security and validity of the coin. That choice is ours now. But anyway, so yeah, I think to some extent Bitcoin's revolution is under threat. But I'll be honest, I think that the threat that exists is one that we create for ourselves. Meaning that we do not need to abide by the threat. We don't have to acknowledge the threat as a real threat to what's going on here. We can simply ignore it. As is, states and other municipalities are letting prisoners out of prison. They're not doing that for no reason. They're not doing that because of COVID. They're not doing that because of good behavior. They're doing that because they can't afford to keep them in fucking prison anymore. They're strapped. And that's not going to change just because they managed to get some way into crypto. Anyway, so the next thing I got up here is on Cointelegraph.com. And this one's by Samuel Hague. Coin list exchange struggles, but near disaster averted. Despite selling out... Oh, yes, penis. Despite selling out in less than 3 hours, CoinList's second attempt at hosting Near's final token sale saw the platform struggle as investors rushed to participate. CoinList's second attempt in 24 hours at hosting Near's final token sale saw the exchange once again buckle under a flood of traffic from prospective investors. Near's final sale before mainnet was originally planned for August 11th, but the token sale was abruptly postponed by 24 hours after investors were left clicking refresh and filling out captchas for 90 minutes while unable to participate in the offering. Despite CoinList reassuring users that the platform would be scaled to handle the surge in traffic, many investors today again found themselves clicking refresh for nearly 2 hours while waiting to access CoinList. Despite CoinList's near disastrous performance throughout the sale, Near sold out of 100 million tokens worth nearly $30 million within less than 3 hours of the sale's commencement. However, many wannabe Near investors missed out, and many of them blamed the technical issues. Prospective Near investors pushed back. CoinList's Twitter account has been besieged by complaints from prospective investors who were unable to purchase tokens, with the account tweeting its apologies to the Near community over the past hour. The Near token sale obviously did not go as planned for many of you who wanted to participate. To the Near community, we are truly sorry. We are working with the Near team to find a way to make things right for you. CoinList said that, quote, the sale was oversubscribed and that a majority of participants were always going to miss out. Adding that the firm is currently, quote, working through a post-mortem to ensure fairness. This is the kind of pathetic bullshit that happens when you aren't participating by putting forward hardware and quote unquote scaling the network. That's what's supposed to be happening. You know, when they're saying scale, they're buying up fucking AWS instances. That's it. They gotta pay somebody to set them up and configure them properly. What's so decentralized about that? You know, in the original fucking altcoin boom, and I'll just say this. Due to the vast number of altcoins that came out during that time, I can assure you there is no big-ass fucking technical barrier to entry stopping you from doing it. It's just a matter of you studying and applying what other people have learned during that period of time. It's not going to take you all that long, and the riches, if you do it fucking right, are beyond your current imagination. I mean, really, these people were through $30 million at 100 million tokens, and in less than 3 hours they sold out. They don't have a mainnet yet. They probably don't even have software for the mining or the validating or whatever yet. And they got people throwing $30 million at them. That gives you an understanding of how desperate this market is. But the market doesn't need money. It's not that the market doesn't have money. They threw $30 million at this fucking thing. It's a bunch of fucking vaporware. They threw $30 million at it. I shouldn't say it's vaporware, but it's not functional as they described. And yet, people threw $30 million at it. So what that tells you is that with 100, maybe 200 of your friends, you could have created a fucking network. You could have been hosting your own little nodes, replicated CoinList functions, and then came back here on Twitter and said, hey, yo, if you all want to participate in this thing, this is the disbursement, this is the white paper, come and check it out. This is our social media, this is our Telegram, this is our Discord, this is our Twitch channel. Come and fucking live stream with us. Talk about development of this thing. Let's talk about use cases. That's how you drum interest. That's how you quote-unquote scale your network. You don't scale it by people throwing fucking money at you and creating virtual machines on AWS to simulate a fucking network. That's like so fucking antithetical to everything about crypto that I don't understand why people would categorize anything like this as a cryptocurrency. But then again, we still have Ripple out there, so and we still have USDT out there, and people calling that thing a fucking cryptocurrency, even though it's not. Anyway, let's go ahead and throw back down with some music. As far as where to go, I think this song is appropriate, but I will say this. It's only this way because you are not out there trying to build the networks of tomorrow. You're out there going to third-party arbiters and saying, hey, please enslave me. Make fees off of my every transaction and enrich yourself. Here it is, System of a Down, Prison Song, here on Coin Metal. And that was Slipknot with Vermilion. And so next I got this thing here. It's on Cointelegraph. And I don't know if that's the one I want to cover first of this. Yeah, why not? So we're going to cover one, and we're going to cover the next, and then we're going to go to the source. And so the first one here is on Cointelegraph.com, and this is by Benjamin Pyrrhus. So yes, penis. Yam suffers technical outage following scam accusations. My goodness. Yam Finance, YAM, is the latest fad in the crypto space, recently warned the public of a technical bug affecting the ecosystem. Quote, we have found a bug in the rebasing contract, the project said in an August 12th tweet. Quote, all funds in staking contract are safe, as this is an unrelated part of the protocol, the project added, also noting participants' YAM token holdings remain unaltered. As the decentralized finance or DeFi crypto boom continues, something called yield farming has come into the spotlight. Yield farming is essentially the latest passive income fad in crypto. YAM has risen to the top of the conversation recently as the headline act in the yield farming sector. Unlike many assets in the crypto space, YAM boasts a fluid token supply in search of value stability based on the market. Previous Cointelegraph reporting explained. The process involves, quote, rebasing and YCRV a YAM stablecoin. Quote, rebases following the initial rebase will mint more YAM than intended, YAM Finance said of the recently uncovered bug in a subsequent tweet. Further tweets explained the project's proposed bug solution, including setting a zero rebase level. The stated bug follows an August 11th tweet from Shapeshift CEO and crypto expert Eric Voorhees, in which he called YAM a scam. YAM holds just the latest hype-driven speculated crypto bet amid overall soaring prices. Yeah, that's not necessarily the indication that it's a good project. And going on to that, I looked on YAM's website, and this is yam.finance, and I haven't clicked on it yet, but it says audits, none. While the initial creators of the YAM protocol have made reasonable efforts to attempt to ensure the security of the contracts, including forking much of the codebase from existing well-audited projects and soliciting review from friends, nothing approaching the rigor of a formal audit has been conducted at this time. We strongly urge caution to anyone who chooses to engage with these contracts. We're going to go ahead and click next. Let's see. Attention YAM Uniswap LPs. The only Uniswap pool that is compatible with YAM is YAM/YCRV, Curve Y pool tokens. Providing liquidity to other Uniswap pools is dangerous. You will lose your share of rebases. I understand. And so, I'm on... Let's see, it's a great day to save YAM. Interesting. Let's see, farms, unlock wallet. Click on unlock wallet and nothing happens there. Interesting. No explanation of it. Gotta wonder exactly what the base of it is. And so, yeah, I looked a little bit further into this, and it would seem that there's something else going on with this. And this saw in Cointelegraph, and this one's by Martin Young. So yes, penis. 5 hours to failure. The Save YAM proposal is falling short, and this was authored approximately 2 hours ago. Let me go ahead and refresh it just to check and verify there. Yeah, approximately 2 hours ago. A YAM finance code flaw saw the project ask investors to pledge to save the platform. Not enough have. The future of the YAM finance yield farming protocol hangs in the balance as it awaits token deposits for a governance vote that could save the project. With less than 5 hours to go, YAM is only a third of the way towards 160,000 tokens required. A code bug discovered earlier today in one of YAM Finance's smart contracts sent the hottest thing in DeFi into a tailspin as it scrambles to find a fix through its decentralized governance system. The project posted an update outlining the issues and making a plea to stakeholders for them to pledge their tokens to save the platform. Quote, "We need YAM farmers to act now. If we are successful, YAM holders will very likely vote to reward those voters who helped save the protocol." Read more details, and it gives us a link, and we're probably going to follow that up after this. The code flaw causes more tokens than were intended to be minted through a system called, quote, rebasing, which was supposed to allocate 10% of them into a treasury via a dollar-pegged stablecoin. This causes too much collateral to enter the treasury, impeding future governance actions. Awaiting collateral for governance. In order to fix the flaw, two proposals were made to reset rebase levels and essentially, quote, restart the system. It was initially thought that 35,000 YAM tokens would be enough to achieve a governance vote. However, Compound Finance CEO Robert Leshner, who warned about the risks on launch day, advised the team that 160,000 tokens would be required. The Save YAM blog post summarizing the recent events added that if governance is unable to submit a bug fix proposal prior to the second rebase, no further governance actions will be possible due to the amount of YAM in the reserve. It added a stark warning that, quote, "If this happens, the YAM treasury will become ungovernable and those funds will be lost." At the time of writing, there had been over 56,000 votes delegated, but with less than 5 hours to go, chances of reaching that target are looking slim. Let's see. Delegated tokens need to remain in YAM wallets until 9 a.m. UTC Sunday, August 16th for them to count, which presents another risk for yield farmers if the platform collapses. DeFi expert Cooper Turley commented on the possibility of not reaching a required amount for the governance vote due to high gas fees. Quote, "Fascinating experiment in YAM coordination. Will community members eat $100 in gas to save the YCRV treasury? Feel like this is a pretty crucial turning point for the project." Hero to Zero. The YAM token was launched with zero value, but rapidly surged to a high excess of $165, according to CoinGecko. News of the code flaw and governance quandary resulted in a plunge of over 90% to current levels around $12. The amount of collateral deposited over the past 30 hours since launch has topped $570 million, according to Yamalytics. Wow. That's a lot of people that are probably going to get wrecked. Let's see here. I got this thing here. It's on Medium. And it's a Medium post. It's by Yam Finance. Save Yam. Long story short. Number one, we found a bug in the rebasing function that mints too much to reserves. Number two, the excess mint stays in the YAM reserves contract. Number three, this would make it impossible to take any further governance actions. 4, we need YAM farmers to act now to save this project. 5, we believe that if the community saves YAMs, token holders will grant lost rewards plus a bonus to those who acted to save the system. Read on for more details. This post will be updated as we know more. What happened? Total supply equals initsupply.mul, YAM's scaling factor. Should have been total supply equals initsupply.mul, YAM's scaling factor.div, base. No user balances are affected and assets in the staking contracts are unaffected. However, the initial rebase that occurred at 7 a.m. UTC today added approximately $500,000 worth of YCRV to the YAM treasury. If governance is unable to submit a bug fix proposal prior to the second rebase, no further governance actions will be possible, as so many YAM will be held in the reserve that it will be impossible for any proposals to reach quorum. If this happens, the YAM treasury will become ungovernable and these funds will be lost. I'd like to know what the process is by which the funds will become ungovernable and the funds will be lost. Where the fuck do they go? Continuing. The next rebase at 8 a.m. UTC tomorrow, Thursday, August 13th, will result in an oversupply of YAM into the reserve. However, quorum for passing a proposal is determined at the time the proposal is submitted. As long as we initiate the proposal prior to the second rebase, there is an opportunity to successfully modify the contracts to fix the bug and allow the YAM experiment to continue. We need 1,600,000 YAM, 160,000 pre-rebase YAM, delegated via yam.finance by 7 a.m. UTC on Thursday, less than 7 hours from the time this post was published. After the proposal has been submitted, users are able to transfer or deposit their YAM back into the staking pool as long as the delegated voting power never drops below 400,000 YAM, 40,000 pre-rebase YAM, at any point during the 3-day voting window. While it is possible to delegate yourself and then vote, we strongly urge everyone to delegate via the UI on yam.finance in order to minimize complications. In other words, make sure the money gets into our wallet. After we dealt with this bug, you can redelegate your votes to yourself or any other address at any time. Yeah, whatever. That sounds just like an ETH scam to me. Put up your ETH and we'll give you twice of it later on. Continuing on. There's an opportunity cost leaving YAMs in your wallet for 3 days. We believe token holders will grant lost rewards plus a bonus to those who acted to save the system, as determined by on-chain data snapshots. The team that created YAM will strongly advocate the community to do this. The proposed solution. Updated 1:23 a.m. UTC, August 13th, 2020. The proposed solution is twofold. Number 1, pause rebasing functionality to halt unintended minting. Number 2, transfer control to a more nimble governance contract. This approach will stop the buggy functionality, provide time for a more complete solution, and enable that solution's timely implementation. The new temporary governance contract has been deployed to mainnet and can be viewed here. Its functionality has been tested with tooling graciously provided by Compound, but it is unaudited. The modified parameters of the new governance contract follow. Hard-coded proposal threshold to 10,000 unscaled YAM. Hard-coded quorum to 1% of initial YAM supply. 35,000 unscaled YAM. Decrease voting period to 8 hours. Once the stopgap is in place, the longer-term solution will involve fixing the supply schedule back to the initially intended parameters and granting lost rewards plus a bonus to those who acted to save the system. Yeah, whatever. Let's see what the response is. There's actually a response on here. Okay, save YAM says. Okay, says save YAM. Yeah, whatever, dude. I think this is it's interesting how they're addressing it, but this thing was apparently started with no money, and people just threw $570 million worth of ETH at it. So if they lose their ETH, I'm not going to feel too sad. This idea that the funds are going to be lost, and I don't understand how that happens. Where are the fucking funds going to go if they're lost? I just don't understand that, and I don't understand how the inflated supply is going to make it unregulatable. Is it just going to make it too expensive? You know, what if Ethereum tanks to like $30-40 for a coin? All of a sudden gas will get really cheap, and whatever YAM that you have staking will also decrease in value, and it should make it governable again. Now, I don't know. Personally, I see the potential for this being a number of different scams. And Eric Voorhees supposedly already called this a scam. So, I don't know. I didn't get into it. I didn't download the code. Looking at it and considering just what I've been able to discern from this, this seems like a waste of money. But you know, if if people are willing to waste their money to the tune of $570 million on it, that is their fault. You know, again, there is no force on this planet that will entirely protect you from your own stupidity. If you choose to throw your money at the new shiny, thinking that your yield is going to be 10x, 50x, fuck you. The people that are going to make money on it, they're already in it. They already have the tokens. They're just waiting for you to fund it. You know, this is the problem with these whole fucking DeFi projects, is they're asking for money up front. You know, I don't care that they have a quote-unquote smart contract. They don't have enough of a network running it. They don't have individual miners running it. You know, they probably have some firm mining it for them. And there are firms out there that do that. Although 90% of them just set up a fucking contract on AWS and set it up there. Seriously, folks, if you're going to get into crypto, know what the fuck you're buying. And if all you're buying is some fucking butt token that's being issued by a centralized network that's delegated by somebody else and governed by somebody else, you might as well just hand them a check and just say thanks. Thanks for all the fish, so long, and thanks for all the fish. You know, thanks for the pep talk telling me that I'm going to make money, but I know that I'm just giving it to you. I'm going to save myself the illusion by giving it to you that I'm somehow going to get something back out of this. Again, if you're not doing this with your own hardware, the chances that it can be compromised, the chances that there can be bugs in the code that you don't know anything about until it's way too fucking late, go way up. When they say verify, not trust, they're not talking about going to just some Block Explorer website and looking it up. They're talking about you doing it on your own node. And I think that's something that's been lost on a lot of people coming into cryptocurrency, is that they're led to believe that it's somehow just like their bank or Visa or whatever, that, you know, they just give people money and they can trust those people with that money, and that everything is just going to work out fine. And if it's not, that they actually have some sort of equivalent recourse to what they would have in legitimate, I won't say legitimate, legacy markets. There's more than enough fuckery in legacy markets to consider them less than legitimate. At least on their face. But that's not to suggest that cryptocurrency is entirely without its own little inherent flaws. It is, after all, the product of humans. So I got this thing on the blockcrypto.com. Backrunning bots are driving up Ethereum transaction costs as they chase the best trades. And this is by Michael McSweeney. This is authored August 12th, 2020 at 6:09 p.m. EDT. But yes, penis. Ethereum transaction costs are soaring, and bots trying to obtain the best possible price. Oh, what? What the hell? Give us the whole fucking article. Oh, you sons of bitches. It's not letting me read it. Oh, you son of a bitch. Let me see if I'm already subscribed to this thing. If I'm not, I'm just gonna get out of this shit. Come on, fuckers. Ah, fuck them. Never mind. I'm not gonna read it. Although, you know what? You know what I could do? Something that important. Chances are that somebody else wrote about it too. Let's look at it. Backrunning bots. Okay. Let us see Search Google. Let's see if we can find it on another source. Let me see if it'll... Let me see it from somewhere else. No, it's not going to let me do it. Let's see if this one will. No, it's fucking referring me back to the block. Let me see. I'm looking for another source to see if somebody's provided the entire article without directing us back to the block. And that doesn't seem to be the case, so apparently it's all monetized. Let's see here. Well, damn it, Jim. Well, I guess we're just gonna have to... Oh, wait. Here we go. Well, this one's probably where that came from. It's originally on CoinDesk, I think. DeFi traders are gaming Ethereum for higher profits, researchers say. And this is authored on August 5th, 2020 at 1720 UTC. And this is by William Foxley. Decentralized finance has been clogging the Ethereum network, but not in the way most analysts would have guessed. An architectural quirk in the most used software version of Ethereum, Geth, has led to an uptick in the practice of spamming the network to secure trade profits over the last 6 months, according to Certus One co-founder Hendrik Hofstad. Transaction spamming is one of the many reasons the average Ethereum user fee has increased some 800% since May, according to Coinmetrics. Ponzi schemes like MMM or DeFi's general growth in 2020 are also to blame. Hofstad told CoinDesk that algorithmic trading firms have created bot swarms to watch the Ethereum transaction queue called the mempool. These bots wait for large trades on DeFi platforms such as Uniswap. After they go through, the bots quickly place orders to take advantage of price movements in what is called backrunning. Too many firms knew about this practice, though. Some firms switched up their tactics over the spring months by sending out a wall of executions to crowd out others and secure a backrun order. Higher reward for miners, higher profits for traders. Rough modeling shows some $5.99 million in gas fees have been used to execute this trading strategy since 2018, according to developer Philip Castanagoy. That's about a week's worth of typical Ethereum fees for useless transactions. Moreover, the majority of these trades occurred during March 12th's Black Thursday, when DeFi platforms saw record volumes. For trading firms, this translates into more fees overall, but arbitrage profits into the hundreds of thousands, according to addresses provided by Hofstad. For the network, spamming crowds out other transactions. It also increases the average fee for everyone. On July 29th, the Geth team approved swapping the execution model to a first-come, first-served basis. Yet, it remains to be seen if mining firms will update to the new Geth version. Hofstad said miners could keep doing business as usual if they value the extra pocket change from DeFi traders more than helping out the network in general. Hofstad is smoking crack. Miners are doing what they're doing out of self-interest. That is, maximize their self-interest, i.e. how much money they're making, their ROI. Anyway, continuing on. Indeed, total network fees per day on Ethereum has increased 1,077% since May 5th, from $162,200 to $1,909,000 on a 7-day rolling basis, according to Coinmetrics. I would suggest that that's this is a product of Bitcoin being so expensive, is that people are using other networks, and Ethereum is a lot faster than Bitcoin. And so, apparently gas fees are getting up there. From what I understand, somebody paid like $16, and I want to say that was a couple hours ago or something like that. But yeah, we're going to continue to see this on networks as people start shifting around their traffic. And ultimately, I think that even low-cap coins are going to see a great deal more traffic, because the important parts are, is the transaction valid? Is the code correct? Does the code have bugs? You know, these are getting to be far more important. And I think that one of the things it's going to show us is that an overdependence on any one cryptocurrency in particular is complete foolery. It's complete bullshit. This idea that we're going to get to a mono coin economy, fuck you. It's never going to fucking happen. And this is why. If you do not have enough interested parties mining it, your network is going to fuck up. You're going to have 51% attacks. You're going to have spam attacks, so on and so forth. And this is a product of not enough individuals having a stake, a profitable stake, in what's going on. And when I say stake, I don't mean just in money. I mean in actual hardware. What are you giving up to participate in this network? What hardware sacrifice, what bandwidth sacrifice, what electricity sacrifice are you willing to make to sustain the network? These are important aspects of cryptocurrencies that people want to overlook. They don't want to put any work toward it. They don't want any technical proficiency. Well, you know what? You're going to get fucking wrecked. That's all there is to it. You either put some fucking hardware to it or you get wrecked. Period. Anyway, let's go ahead and throw back down with some music. And here we go. A little bit of Pantera for us. Cowboys from Hell, here on Coin Metal. And that was Iron Maiden with 2 Minutes to Midnight. And it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Friday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. Do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And so as far as our last dance is concerned, I haven't been playing this one very much, and I think it's about time. Faith No More, Epic, Last Dance, here on Coin Metal. Thank you again for listening, and y'all have an excellent evening. Good night.